Okay, let's unpack this. This is the Deep Dive, where we jump into the source material you share with us to pull out the most important insights. Today, we're diving headfirst into an investor relations presentation. This one covers the first quarter of 2025.
That's right. And our mission, it's pretty simple. Go through this update, pull out the core insights, the performance highlights from Q1 25,
Yeah.
basically helping you understand what's really driving things according to this material.
Yeah, getting you the key info quickly.
Exactly.
Perfect. Let's get straight into it then. The presentation kicks off by laying out the company's vision and mission. The vision seems pretty straightforward.
Opening the global markets for everyone to trade and invest in a simple and transparent way. That's the line they use.
Simple and transparent. Okay. And the mission, how does that tie in?
It complements it well. It's about opening global markets, connecting users to leading investors, and importantly, providing the tools for people to grow their knowledge and their wealth. That's the whole tone, really.
Right, paints a picture of accessibility, making it easy for everyone. Okay, so now, jumping straight into the Q1 2025 business highlights, the real snapshot. What are the key numbers they're leading with?
Well, the first big one they flag is the number of funded accounts.
Funded accounts, okay.
As of the end of Q1 2025, that stood at 3.58 million.
Wow, okay. Nearly 3.6 million accounts with actual money in them. That's a significant user base.
And they're spread out globally.
They are. Yeah, the presentation mentions these accounts are across 75 countries. And they give a geographical breakdown, too, which is interesting.
Oh, really? Where's the biggest concentration? Any surprises there?
Not really a surprise, maybe, but Europe and the UK, that's the lion's share. 70% of the funded accounts are there.
70%. Wow. So that's clearly their core market right now. What about the rest?
Asia Pacific follows with 16%. Then you've got the Middle East and Africa region at 10%. And the Americas bringing up the rear with 4%. Interesting distribution. So yeah, global reach, but heavily weighted towards Europe. Okay, what about the key financial numbers for Q1?
Right. So for Q1 2025, they highlight three main figures: assets under administration, net contribution, and adjusted EBITDA.
Okay, let's take those one by one. Assets under administration, AUA, what's the number?
AUA stands at $14.8 billion for Q1 2025.
$14.8 billion. And AUA is basically just the total value of assets users hold on the platform, right?
Exactly. All the stocks, crypto, cash, everything held by users. So yeah, nearly $15 billion. It definitely speaks to the scale they've achieved.
It really does. Okay, next up was net contribution.
Yep, net contribution came in at $217 million for the quarter.
$217 million. Remind us, what exactly is net contribution? It's not just straight revenue, is it?
No, it's not. Think of it as their revenue after you take out the direct costs tied to generating that revenue. So things like transaction costs, commissions they pay out, payments to liquidity providers, that kind of stuff.
Got it. So revenue minus the direct costs of getting that revenue, a key profitability metric for them, I imagine.
Definitely. And the third figure,
Adjusted EBITDA.
Adjusted EBITDA, right? That was $80 million. EBITDA, earnings before interest, taxes, depreciation, and amortization. Adjusted EBITDA just tweaks that, often takes out maybe one-off items or non-cash things to give a clearer picture of core operational profit.
So $80 million in core operational profit using that measure. And does the presentation say which of these metrics they focus on most, like their main gauges?
It does. It specifically calls out funded accounts and net contribution as their key performance indicators, their KPIs.
Makes sense. User growth and core profitability.
Those seem to be the headline numbers they're tracking most closely.
Okay, so we've got the snapshot. Over 3.5 million funded users, mainly Europe, holding almost $15 billion in assets, generating over $200 million in net contribution, decent operational profit in Q1. Right. Now let's pivot a bit. From the numbers to what's actually new on the platform. What product and service updates did they roll out this quarter?
Yeah, they highlighted several key things. One area was continuing to expand their smart portfolios.
Ah, yeah, the curated investment baskets. What kind of examples did they give for Q1?
They mentioned adding things like a Wisdom Tree commodities portfolio. And they ran a campaign offering 100% capital protection on certain investments for a limited time, obviously.
Interesting.
And this fits into their stated goals, right? Personalizing the investing side and just expanding the range of assets and strategies available.
Makes sense. Personalization, more options. What else was new? Any other features?
Securities lending. That became available in Europe this quarter.
Securities lending. That's where users can lend out eligible stocks they own and potentially earn some income on them.
Precisely. Yeah, another way for users to potentially optimize their holdings. They also expanded the number of stocks you can trade, 245.
24 hours a day, 5 days a week, for more stocks. How does that really change things for a user?
Well, think about it. If you're in a different time zone, or maybe you want to react fast to news that breaks after traditional market hours, it gives you a lot more flexibility. You're not stuck waiting for the opening bell for certain key stocks.
Yeah. Okay, that's a clear practical plus. What about more localized stuff?
Right, so in Australia, they completed the integration of Spaceship.
Spaceship.
Yeah, it's about expanding their savings products, specifically for the Australian market. The source mentions this helps support users' long-term financial goals with, relevant local offerings.
Local solutions often hit the mark better.
Good point.
And currencies. Anything on that front?
Yep, they expanded the ability for users to use their local currencies more widely within the whole eToro money offering.
So making it easier, maybe cheaper, to manage funds without constantly converting back and forth between, say, dollars and euros.
Exactly, just smooths out the whole money management side, especially if you're not in a major currency zone. And then for the potentially more active traders, or maybe more sophisticated ones, they introduced futures and options trading that launched in the UK and EU markets.
Futures and options. Okay, those are definitely more complex instruments, leveraged usually. What does adding those signal about the platform?
Well, it signals they're broadening the toolkit, right? If you're a trader looking for more advanced strategies, maybe hedging, things like that, these instruments open up those possibilities. It caters to a different segment.
Okay, so if we pull all these updates together, smart portfolios, securities lending, 245 trading, the local savings and Oz, currency options, F&O, how does the presentation frame these strategically? Do they connect them back to bigger goals?
They do, yeah. The report actually groups these under 4 main strategic pillars. They talk about enriching the neobanking offering, enhancing the trading experience, personalizing investing, and offering local savings products.
Okay.
So pretty much everything we just talked about fits neatly into one or more of those buckets. Shows a kind of cohesive plan to build out the platform's capabilities across the board.
Let's zoom in on that neobanking piece for a second. You mentioned enriching the eToro money offering. What's the specific aim there, and what did they actually do in Q1?
So the stated goal is really about building a more complete money management experience. It's not just about linking your bank account to deposit funds anymore. It's pushing towards offering features like actual local bank accounts, better local currency support, debit cards, more like a primary financial hub.
Okay, so becoming more central to a user's financial life.
That seems to be the direction, yeah. And specific actions in Q1. They partnered with local financial institutions in several European countries to start offering local bank accounts.
And how does having a local bank account help a user? What's the benefit?
Well, the presentation says it streamlines funding and withdrawals. So instead of maybe dealing with slower international transfers or extra fees, you might be able to just do a quick local bank transfer in your own currency. Faster, cheaper, potentially.
Yeah, that sounds like a tangible plus for users in those specific countries. What else on the neobanking front?
They also improved the trading side of it by expanding the number of assets you can trade directly using your local currency, right from your eToro money account.
Fewer steps, then. Less need to convert funds before you hit buy.
Exactly. Removes a bit of friction. And one more thing. They enhanced the wallet function to support multi-asset investing.
Multi-asset investing support in the wallet. What does that mean practically?
It's really about making it easier to manage and move your money between different types of investments on the platform. So if you hold stocks, maybe some crypto, perhaps use smart portfolios. The idea is to make it seamless to reinvest or shift funds around. More flexibility.
Okay, so it's not just adding individual features, it's about trying to make the whole ecosystem on the platform work together more smoothly for the user.
That's exactly the impression, yeah.
Okay. Now, in this world of online trading, investing, crypto, trust and security are obviously huge. What did the presentation highlight on the regulatory front for Q1?
Yeah, a big focus, unsurprisingly perhaps, was on crypto compliance. Makes sense given how fast things are moving there.
Right. So what was the major achievement they flagged?
They obtained the European Crypto Authorization. Specifically, it's the MiCA permit, and they got it from CySEC, the Cyprus Securities and Exchange Commission.
MiCA. That's the big new EU crypto framework, right? What does getting that permit actually let them do?
The report's pretty clear on this. It enables passporting of their crypto asset services across all EU member states.
Passporting, yeah.
meaning that single authorization from SISC basically acts as a license to offer their crypto services legally across the entire European Union. They don't need separate licenses everywhere under this framework.
Okay, that sounds like a really significant step for cementing their position in the EU crypto market. Any other compliance news?
Yes, they also completed their SOC2 Type 2 compliance certification. This was specifically for their crypto asset custody.
SOC2 Type 2 sounds a bit technical. What does that mean for someone using the platform? What does it signify?
So the presentation describes it as hitting an industry gold standard for data security and how they operate when it comes to holding crypto assets for users, the custody part.
Okay.
So for you as a user, it's meant as reassurance. It shows they've had these rigorous independent audits, confirming they have strong internal controls and security measures in place to protect your digital assets and your data.
Got it. So the make a permit is about the regulatory access across the EU, while SOC2 Type 2 is more about the operational security of how they handle the crypto itself.
That sums it up nicely. And the presentation frames both of these as, key steps, reinforcing their position as secure, compliant, and global, especially as regulation gets tighter.
All right, let's get into the weeds now on the financial performance data. How did Q1 2025 actually shape up financially? Especially compared to the same time last year, Q1 2024.
Right. Well, we mentioned net contribution is a key KPI for them, and the presentation shows it grew 8% year on year.
8% growth.
Okay. It went from about $201 million in Q1 of 24 up to $217 million in Q1 of 25.
Okay, 8% growth in that core profitability metric sounds pretty solid. What did they say was driving that growth?
They attributed it mainly to strong trading activity in what they call ECC. That's equities, commodities, and currencies.
ECC, traditional assets, basically.
Right. And how did crypto fit in?
Good question. What about crypto activity?
Well, crypto trading activity was described as solid in Q1 2025. But, and this is important, the report notes it was below the highs they saw back in Q4 of 2024.
Ah, okay. So traditional assets were the main growth engine for net contribution this quarter. Crypto was still significant, but maybe cooled off a bit from that previous quarter's peak.
That seems to be the story the numbers tell. And the presentation gives a pretty detailed breakdown of where that net contribution came from, which is quite insightful.
Yeah, let's look at that. Seeing the different revenue streams, can you break down the main categories? Q1 25 versus Q1 24?
Sure. So net trading income from ECC, again, equities, commodities, currencies, that was $97 million in Q1 25. That's up from about $86.9 million in Q1 24. So it confirms the ECC growth.
Okay, healthy increase there. What about revenue directly from crypto assets themselves?
Right. Revenue from crypto assets was $46 million in Q1 25. Now, this is actually a notable increase from the $31.6 million they saw in Q1 24.
Oh, interesting. So even though activity might have been down from the absolute peak in Q4 24, the direct crypto revenue was still significantly higher than it was a year before.
Exactly. Suggests the longer-term trend for direct crypto revenue, at least year on year, was still positive, despite that quarter-over-quarter dip from the peak.
Okay. And crypto asset derivatives?
Net trading income from crypto asset derivatives also went up. It rose from about $36.7 million in Q1 24 to $50 million in Q1 25.
Wow. So their income from trading crypto derivatives also saw a strong year-on-year jump. What about net interest income from users? That was another category, wasn't it?
It was, and this one actually saw a decrease. It came in at $22 million in Q1 25, which is quite a bit down from the $45.9 million they reported in Q1 24.
Whoa, that's a pretty significant drop in interest income. Almost halved. Any reason given for that?
The presentation doesn't explicitly spell out the why behind that specific change. But, it could be influenced by a bunch of things, changes in interest rates they offer, maybe shifts in how users are holding cash versus invested assets, perhaps changes in their own funding costs or structure. It's definitely a noticeable shift in the revenue mix, though.
Yeah, that one definitely stands out when you compare the years. Any other major sources making up that net contribution figure?
There are smaller bits from currency conversion, other income, other interest income, but really the bulk of it comes from those four main categories we just ran through: ECC, crypto asset revenue, crypto derivatives, and user interest.
Okay. Now, beyond the dollar amounts, the presentation also looks at trading activity like the number of trades and the average size of those trades. What trends did you see there?
Yeah, they provide data comparing Q1 25, not just to Q1 24, but also to the quarter right before it, Q4 24. So we get a feel for recent momentum, too.
Good. Let's start with ECC trades, equities, commodities, currencies, volume, and size.
Okay, number of ECC trades in millions. 128 million in Q1 25. Now that was actually an increase from the 120 million trades in Q4 24. So quarter-over-quarter volume growth there.
Okay, bounce back from Q4. How about year on year?
Slightly down year on year. It was 135 million trades back in Q1 24.
Okay, so ECC volume recovered from the end of last year, but didn't quite hit the levels of early 24. What about the average size of those ECC trades?
Right, the average invested amount per ECC trade was $262 in Q1 25. That figure was actually down a bit from $287 in Q4 24.
Smaller trades than Q4, but how about versus last year?
Up significantly versus last year. It was only $216 back in Q1 24.
Okay, interesting. So quarter over quarter, trades got a bit smaller on average, but year over year, people were putting significantly more money into each traditional asset trade. Suggests bigger conviction per trade compared to a year ago, maybe?
Could be interpreted that way, yeah.
Mm.
Bigger average bets on ECC compared to early 24. Now, shifting to crypto asset trading activity.
Right, volume and size for crypto.
Number of crypto asset trades in millions.
Right.
20 million in Q1 25. Now, that volume was down from 23 million in Q4 24.
Okay, reflecting that cool down from the peak.
Exactly. But interestingly, it was exactly the same volume as Q1 24, which also saw 20 million trades.
Huh. So crypto trading frequency was stable year on year, but dipped from that high activity Q4. What about the size of those crypto trades? This could be telling.
It is. The average invested amount per crypto asset trade was $239 in Q1 25. Now, that was down quite sharply from $347 in Q4 24.
Wow, yeah, that's a big drop from Q4. How about versus Q1 24?
Also lower. It was $258 back in Q1 24.
Okay, so that plunge in the average crypto trade size from Q4 24 to Q1 25 is really striking, down nearly a third. It really highlights that while people were trading crypto just as often as a year ago, the amount they were putting into each trade shrank considerably from those peak levels late last year.
It really does. It underscores that shift. Maybe less large-scale trading, maybe more smaller retail trades, or just less capital being deployed per trade compared to that Q4 peak.
Fascinating. You see these different dynamics playing out between traditional assets and crypto all on the same platform. Okay, finally, let's circle back to assets under administration, AUA. You mentioned it grew overall, but let's look at the composition.
Absolutely. So total AUA grew 21% year on year. Went from $12.2 billion at the end of March 24 to $14.8 billion at the end of March 25.
21% growth in total assets, that's pretty robust. And the presentation said this was driven by equities. Can we see that in the breakdown?
We definitely can. Let's look at the mix on those two dates.
Yeah.
So March 31st, 2025, total AUA, $14.8 billion. That was made up of $7.6 billion in equities.
Yeah, over half.
$3.1 billion in cash, and $1.8 billion in crypto assets.
Right. And compare that to March 31st, 2024, the $12.2 billion total then.
Back then, the breakdown was $5.5 billion in equities, $4.2 billion in cash, and $2.5 billion in crypto assets.
Okay, putting this side by side. Yeah, the shift is crystal clear. Equities jumped massively from $5 to 5 Bs to $7.06. Big driver.
Huge driver.
Cash dropped significantly from $4.02 Bs down to $3.01 Bs. And crypto OSITs also saw a decrease in AUA from $2.05 Bs down to $1.08 Bs.
Exactly. It totally confirms the report's point about equities driving the overall AUA growth. But it also shows this really significant change in the mix of what users were holding over that year. Proportionally, much more in equities, quite a bit less in cash, and also less in crypto.
Right. So even though the total pot of money on the platform grew, how users allocated that money shifted pretty noticeably towards stocks. Fascinating snapshot of user allocation trends.
It really paints a picture, doesn't it?
It does. Okay, so we've really dug into the numbers, the product rollouts, the regulatory stuff. Now let's tie this all back to you, the listener. If you're using a platform like this or thinking about it, why should these details from an IR presentation actually matter to your experience?
Yeah, this is the crucial bit, isn't it? I mean, those product developments we talked about, like expanded 245 trading, using your local currency more easily, adding futures and options, these directly impact how you can actually trade and manage your money.
Exactly. If you work odd hours or follow global markets, 245 trading on more stocks is a big deal. If you live outside the US or Eurozone, those local currency features could genuinely save you money and hassle. If you're a more advanced trader, getting access to F&O opens up new possibilities. These aren't just abstract bullet points, they're real changes to the service.
Totally. They broaden the platform's usefulness, cater to different needs, different styles of trading and investing.
And what about that focus on regulation, the MiCA permit, the SOC2 certification? How should you think about that in terms of trust and security?
Look, that's fundamental, right? Knowing the platform is actively getting these key licenses, like the EU-wide MiCA one for crypto, and going through tough security audits like SOC 2, it's meant to give you confidence. Confidence that they're playing by the rules and taking the security of your assets and data seriously.
Yeah, it provides that layer of reassurance, that legitimacy, which is so important in the digital finance space.
Couldn't agree more. And finally, that financial performance, the AUA mix. What does that tell us about what users like you were actually doing on the platform in Q1?
Well, the numbers clearly show a solid quarter, driven a lot by traditional assets, right? Stocks, commodities, trading volume, and average trade size in ECC look healthy, especially compared to a year prior.
Yeah, while at the same time, crypto activity, though they called it solid, definitely showed signs of normalizing from that really intense peak we saw at the end of 2024. You saw that in the revenue contribution cooling a bit relative
Yeah.
to ECC, and especially in that drop in crypto's share of the total AUA.
So it gives us this concrete snapshot of market trends and user behavior on this specific platform during that time frame. You see strong engagement with traditional markets alongside navigating the, well, often more volatile crypto cycle.
Yeah, shows users have diverse interests and are actively managing their allocations.
Okay, so let's wrap up our deep dive into this Q1 2025 update. Key takeaways. We saw steady growth in their funded user base, global reach, but still very Europe-centric. They were active on the product front, enhancing trading, investing, neobanking, local options, and crucially, big steps on regulation, especially for crypto, boosting those compliance credentials.
And financially, Q1 25 looks solid. That 8% year-on-year jump in net contribution was key, largely fueled by traditional asset activity. Crypto revenue was up year-on-year, but definitely pulled back from the Q4 24 peak. And that big 21% jump in assets under administration, clearly driven by users piling more into equities, which reshaped the whole asset mix on the platform compared to a year ago.
All pulled directly from that source material you shared with us, gives a really comprehensive look at where they stood and their strategy moving through 2025.
Yeah, and it definitely raises some interesting questions about where things go next.
Which leads us perfectly into our final provocative thought for you to mull over, drawing right from these trends. Considering this continued strength and growth we saw in traditional asset trading and AUA, happening alongside that normalization of crypto activity from the late 2024 highs, how might this evolving balance, this push and pull between traditional and digital assets, continue to shape the strategies, the product offerings, and ultimately the user engagement we see on global trading platforms throughout the rest of 2025? Something to think about.